hello, hello. Hello, 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 hello. I wonder if you can hear me. Let me see. Hello. Hello, hello, hello. Okay, this thing is lagged. Okay. All right. Well then, as long as you guys can hear me, I guess doesn't really matter. Well, it's gonna be easier to use my mic and explain because I have come up with the idea um of what am I trying to say here? I've come up with the idea of they say the seasons are different in the year, right? Obviously, well, there's winter, spring, summer, fall. Uh, there's 4 quarters, right? They say the stock market is a little different in each season. Well, it is an arguable statement. I trade from the perspective of humans are the same in the long run, which is not wrong because if I'm trading the same way the whole year, every year, then kind of works out. And I trade in such a way that uh, I have tried to build my strategy in such a way that at any point, any 10 trades were profitable net. So that's how I built my strategy basically. I never really focused on which of my different setups, which one of them is more profitable, which one of them has a high win rate, etc. So, like, I have the 15-minute reversal, I have the 5-minute reversal, I have the continuation from London session that was this trade here, continuation after this candle. After this candle broke that, and that is depending on if the daily is uptrending or not. And then uh there's reversal. What I'll do is, well, while I'm backtesting, that's why I also put in my mic. Whenever I take a trade, I'll explain what that trade is. It's gonna be slower than just me doing my thing, and cause a lot of my trading is the same thing I was trading earlier this year when I was going live. Still, um, still the same thing basically. There's maybe one or two things added, but it's about the same thing. Okay, so what I want to do is I want to backtest from 2008, and I'm gonna backtest just the session, the quarters. So I'll backtest each quarter, and I have my Excel sheet. I have each of my strategy. I have each quarter broken down into each month of the quarter. So right now we're on ESH contract. So I'll go to 2008 and go to ESH contract, and I will backtest each month of that quarter, and I'll do that for the from 2008 till now. Obviously, I can't finish that today. We'll see. I may not be able to finish 2 months today. But the weekend I'll do that a lot, and hopefully I can get through maybe 5 years, maybe throughout the weekend if I put in a lot of hours. And I want to see if there's any like how does my strategy fare in each of the years during this particular um quarter, you know? And what is the win rate? Maybe if I see one that has a higher win rate, or honestly, I'm more focused on the ones that are useless. The setups that have bad win rates. Maybe the one that has higher win rate is compensating for the one that has the low win rate. So I could just take that out. If I take out the one with the low win rate, I can just keep trading my normal higher win rate. I don't have to change really much of, or I'm taking 1 to 2, or now I do 1 to 3, or I'm risking 15%, now I risk 30%. I don't really need to do that per se. I would see the numbers. Maybe it might add up, but anyways, whatever. Let's begin. Oh, before we go, actually, for today's trade, so there was a long we took here that uh obviously that one, the options was losing, right? And then there was this candle that came in. We took it long here, right? We missed the double top here. We took a long here, and that was due to a strategy I kind of found that came up that I named three week influx point. So every time there's a three, it has to be 3 weeks, 1, 2, 3, or 1, 2, 3. Two of the candles have to be uh equal high, equal open and close. So this blue candle close equal to the open next candle, or equal open, so the blue candle is equal to the let's say the blue candle open and close at the same point, or maybe open, let's say something like this: you open, it close up there, and then the next candle opens right at the open of the prior candle. It happens. Maybe it's a spread of 1 or 2 ticks, right? So anyways, the open and close of two candles have to be equal. Open or close of two candles have to be equal, right? So you can't, and then the wicks going out of that has to. You see, it's hard to really explain all of these strategies. Okay, you know what? I'm not gonna explain the 3 point if. I'll just say. Anyway, okay. Let me finish this. The open and close of two candles out of the three have to be equal, open or close, and the third candle has to have the open or close below the. In case of upward wicks like this, then this close has to be below this opens. If it was downwards like this, the reason why I didn't take this, so we had two equal open and close here equals, and then close and open, I guess, and then this open was below the open and close, like uh it was below the open and close, so I couldn't take it because in the case of the wicks being on the downside, it has to be above. I hope I'm not going to explain the 3 week influx point. It's a strategy that happens almost every day, and it just tells. So after that occurs, right? After it occurs, then I want the next candle. Oh my god, this one strategy has a lot of nuances to it. Explaining it out loud is just exhausting. Forget about that strategy. It may not even work long term. I came up with it not too long ago. I like it. It gives me like it's like maybe an influx point. It gives me that was the reason why I had this short yesterday was 1, 2, 3, pulled back down, closed up, closed there. I got in on the break of that, right? And I held that. And if you see here again, it happened here again, 1, 2, 3, and then broke up. And so that influx point, I love it. I like the strategy. It on its own is its own strategy, to be honest. Like that shit is just its own strategy. Let's just put it that way. Like it's a lot. It happens enough times for it to be it's on its own. And then I have my other strategy. Today we had the double top. We had the continuation from break of London session high. So I'll put my what's it called here, right? I'll put this here, or London session low, which would be here. So the extremes, and I use the closes because you put it on line chart. It is the close. I use closes, not the wicks. Whatever. I use closes, not the wicks. I just thought some. Maybe I should just be using the line chart. Uh I think I know what to do. Okay, I use closing not the wicks, and then there's the first trade we took, which was on this candle. Why am I pointing? You guys can see. I literally said point. Anyways, first trade I took, which was on this candle, was the reversal from London session extreme support or resistance. In this case, it was resistance. Candle came in here. I have my numbers, which are, oh my god. I have my numbers, which are 7 points. It cannot the close has to be within 7 points on a 20 point uh range. So I took that short. As if price had closed above this, would have gotten a break even, which it did here. But the reason why we got a break even before that kind of happened was because from my entry point, price had uh closed below 50% of my target of my profit target. You know what? The more I'm talking, I'm spending so much time talking and explaining this shit. I don't want to do this, to be honest. I really don't. Fuck. I think I've spent. Oh my god. I have spent enough time earlier in the year explaining these strategies to you guys. So maybe, you know what? Maybe when I'm actually profitable and I actually have some money and I have the time for this, I will um come back and explain some of these strategies that I can, because some, like, we have the prior day support resistance, these zones. It's simple. You just, oh my god, you know what? They are, when it has to do with the numbers to it. Oh my god. Uh, you know what? Let's just put it this way. I'm streaming not for you, but for me. So whatever you can get from it, I'm not gonna try to explain it, bruh. It's I don't know. I don't want to like. I have numbers. I put in. I have numbers that I came up with for the ES. I put in time to get those numbers, and I don't know how to explain. It has to do with the pre-market London session range, and when it's 20 points, between 20 and 27 points, I will have my stop loss on the day as 10 points. And then with that stop loss set as 10 points, I use that to gauge the invalidation of zone. So like the any support or resistance except for the London session extremes. Any other support or resistance within the day will be invalidated if it crosses 4 points or 40% of the stop loss. So in this case, it will be 4 points because my stop loss is 10 points. That's why you always see I would put like uh put this and see if it's been invalidated. When I'm in a trade, in this case here, I was in a trade because this was a 3-week influx trade. It doesn't. It's like I said, it's on its own, and so I have a 10 point stop loss, but I don't really care for like if price drops this much. I only care if price hits 8.5, 85% of my stop loss and trades there twice, two candles basically. And if that happens, then I will break even immediately. If especially on my options, because well, most of the time it would reverse and stop me at break even. But well, with stop losses sometimes, even though that happens, even though it reverses right after I hit my stop loss, I still get stopped out because it's a stop loss. It's a hard stop loss, right? But that's why I still held this trade. That's why this trade was still good. Anyway, what I was coming to say here was this trade, it did not break even on the options. It did go all the way to 1 point. I bought it at 1.2. It went all the way to 1. I could, and this one obviously took profit. This long took profit. The only thing was this short here. The reason why I even wanted to take this short here was because of I have this thing called the outside candle. Well, it's not unique to me. There's outside candles. There's inside candle. Inside candle means the top and the bottom of the candle is within the top and the bottom of the prior candle. Outside candle means top and the bottom of the candle is outside the top and the bottom of prior candle. So in this case, right? When there's an outside candle and it goes into resistance or support, no resistance in this case. Oh, I have color based nuances too. That's why this is dark color, this is purple. Well, that's because it's outside candle and whatnot. But like say, if I'm buying in support, I won't buy off of the break of a blue candle. I need it to be black or two blue candles. I don't think it will help honestly me to be explaining this thing. Um, but I don't think I should have. I think I should because I took the trade off of the close of this outside candle. I should create a different strategy, or not a different strategy. I should create a different rule because I shouldn't be allowed to do that anymore. Honestly, I'm thinking I should just trade it normally, which would be break of the candle. In this case, it would have been this candle break technically, and that's fine. I'd have taken that trade. But because I was, in this long, if I had taken this double top short, which means that I've already broken even on this trade that I'm currently in and losing, then this long I wouldn't have minded holding it because of this candle volume. Because I saw all of this, right? That's why I held it a little bit, but I didn't want to. I didn't take this trade, so I didn't really have confidence on the whole day anymore, basically. So this long after this candle close, once it was 11:30, which is when was supposed to stop trading, or at least I have a 10-minute buffer. But in this case, I would have stopped trading at 11:30. I would just put my stop loss as break even on this trade, which would have gone to profit, and that would give me profit on the day. Plus, this would have only lost about $30. So $30, $130 on this, $130 on this. That would give me about uh $230 in profit, right? Because of minus 30. But anyways, I didn't take if you're going normally based off of this is still a short, so in this case it would have been long. I'd have taken a short here. I wouldn't have gotten stopped out if I put my stop loss at exactly my entry. I checked numbers. I wouldn't have gotten stopped out. And so this would have been losing. The put would have been losing. The long would have lost about $30. The put would have lost the whole thing, which would have been about $130. $160 gone. If I had taken this, ignoring this, so then this would have profited $130. So I'd have been down $30, right? However, if I had taken this $130 profit, I'd have been up $100. Anyways, I really don't think I'll be able, not good thing I actually tried to explain this day, but I really don't think I'll be able to explain my strategy. What I will do is mute my mic, remove my headset, and backtest uh on my own, but live. Like I said, I'm not doing this live for you guys. I'm doing it for myself. Maybe I should just not even be live, but maybe to help somebody. I don't know. Maybe at least give data for someone else. Um, I'm thinking I'll. You know what? Let me do this. Let me share screen real quick. Screen capture, display capture. Okay. Okay, so if you look at this, this is my um this is my document. It's a guideline for my strategy. Even I don't have the explanation of each of these setups. I don't have the explanation of each of these setups in here. I have some guidelines, rules basically, right? This is basically this is all the strategy I trade, all the setups I take. This is my strategy. All the setups I take, this is my this is it. That's it. So we have the 15-minute reversal, five black consecutive candles. You know what? Um I'll try to explain and give examples this one time and just be done with that shit, honestly. Fuck. Uh I think there was an example of it doesn't happen. This particular one doesn't happen very often. So we need five 15-minute candles. One, two, three, four, five. First blue candle, right? The first blue candle. After that, boom, we take the reversal. And like I said, I have my own set. Set take. In this case, the range was what? What the? In this case, the range was 22. So my thing will be 10 points. 10 points stop loss, 20 points take profit, right? This is in ticks, so 20-point take profit and 10 points stop loss. That will be the trade. Personally, I don't trade. Personally, I don't trade after 11, so I would not have taken this trade. But this is the idea of that particular setup. It doesn't happen as often, but when it does happen, it is pretty nice, right? So in this case, we have one, two, three, four. I won't count this as a black candle, but you can be like, and then you have like one, two, three. So in all of these, there was only this it's because it opened and closed at the same point. So you can consider it a black candle. You can consider it a neutral candle. You can say, fuck it, I'm gonna count this candle just because it looks good, right? And then again, the first blue candle, boom, right? It doesn't happen often, like I said. And I'm a long bias trader, and I'm trading the ES, which is a long bias commodity. Whether you like it or not, it goes up in the long run. So this is my first setup. One, two, three, four, five black candles on the first blue candle reversal. Again, it doesn't happen often. And also, I only trade in during regular trading hours. Regular trading hours 9:30 EST to 1:30. Oh, sorry, 9:30 EST to 4:30 p.m. EST. Um, Again, 15 minutes, five black candles. Like I said, it doesn't happen as often. We saw two. Luckily, the second one was even iffy per my standard, but whatever. How many is this one? One, two, three, four, five, right? Blue candle next, right? And then boom. So that honestly, this I would not take because this is an inside candle, but that's just a personal preference. But you don't really you may not care about the inside candle. I do. And anyway, so this would have been a 10-point stop, 20 points, what's it called? Take profit, right? And that you're taking profit at the end of the day. Another example. Another example. One, two, three, four. Well, we didn't get five, right? Because the blue candle was the blue candle right after. Another example. Do one more example and that's it. One, two, three, four, five, six. First blue candle, risking 10 points. You end up with a small profit right at the end of the day. That's it. I am done explaining that particular strategy. You get the point, right? If you don't get the point, then oh well. All right, next one. 5-minute reversal after 10 black consecutive candles. Well, it's about the same concept as the 15-minute, except it's on the 5-minute. It rarely happens. To be honest, we'll try one more. We'll try 21 days and see if it's happened in those 21 days. I don't think it's happened. We have one, two, three, four. You know what? We can just do this. 10 bars. This 9 bars to here, 9 black candles, and then up until here this is not it opened and closed at two different ticks, so it's a blue candle. It wasn't 10. It needs to be 10 black candles, and then if you want to be iffy, you can count a doji that has the same open and close. But honestly, if you go after if you do anything other than that, you're kind of pushing it. Anyways, you get the point. This one is even rarer than the 15 minutes, right? Then we have the continuation from London session. I already showed you that. You put your first of all, the daily has to be uptrending. How is the daily uptrending? You just look at the so let's look at it from here now, right? So from here we're downtrending, downtrending, downtrending. This can this is why I have my notes. Say volume candle, body of candle is at least twice as big as top wick for long direction or breakout of structure. So in this case, what were we using? We're using here, right? So in this case, top wick that's small, and then body is twice as big. Obviously, this is volume enough because I'm long bias. So this is volume enough for me to start the uptrend. It's almost like I'm trying to gauge where the uptrend is gonna start from on the daily for me to say, okay, I can start taking continuation setups um long. So my line would have been here, somewhere here, right? Line would have been somewhere here, and then we continue to trail. Every time there's a black candle, after price closes on the prior high before that black candle, you move it to the close of that candle. Again, we at this point it would have been here up on if this went to break and closed above that high, then would have moved it to this point. Oh no, to this point if the next candle was blue, right? You move it to the black candle right before. So and then when does trend change? When price closes, in this case, you know what, let's just say for you we'll make it simple. When price closes below that line, technically it's for me, I have my rules in such a way, like I said, I'm long bias, I'm trading a long bias commodity. So what I would do is I would say, okay, price closed once below that line. How long has it been uptrending for? In this case, it was a good while. It closed once below that line. We need a second close below that line before we switch to a downtrend. When we switch to a downtrend, now we'll put this up here. Again, it does. We don't need price to come and close above the line for us to say okay, it switch. Volume in this case, which would be this candle, volume switches switches what's it called, the trend. So after so again, this would have still be downtrending, the line would have come down here, and then this candle happens, immediately we switch it to this long trend, uptrend, and then we just start, and then we bring it up here in this candle, we bring it up here, right? We bring it up here, here, and then it came to close once, right below. And like I said, I don't take the after the first candle, I want a second close. So in this case, after that happens, we're now at this point, right? That's why we have this line here, and we this is gonna be uptrending for a while. Basically, is what it's telling me. This is exhausting, bro. Fuck. I'm doing this once. I'm not even gonna change the title of this video. Whoever finds it, finds it. If you don't find it, you don't find it. You know? GG's. Anyways, next up. So now we have what uptrending, right? So that's a continuation on London session, right? We're uptrending whenever. So then we'll put our extremes. Line here, line there. But continuation is gonna be in a long direction. We don't continue when it breaks to the downside. We continue into the upside. So that's why we take once it closes above. If it's in the first candle, even though it closes freaking it open down here, it closes up here, we take that trade. It's just a personal thing. We take the trade and we expect a continuation. And we risk the range. 10 points. You can figure out what your own stop loss is going to be. I really don't want to explain my Excel sheet. I really, really don't want to explain my Excel sheet because I can actually just show it. I'll show you the numbers I came up with. Honestly, why not? Here. So these are the numbers I'm gonna be using later, I guess. Okay, so this is the Excel sheet, right? So okay. So this is the Excel sheet that I'm using currently. It may change later, but this is what I'm using currently. So when your range is 10 points, when it's 20 points, even though it's 20, even though it's 10 points, I'll still use the stop loss for 10 points. For 20 points, sorry. Even though it's 10 points, I'll still use 10 points at my stop loss. It's just a personal thing. I don't think 7 points is enough for me. But anyways, this is how it is. So this when you use the continuation setups and stop losses stop loss basically are based off of the range right of the range of the London session. And I said till June here, right? It's going to range till June because if you saw the live stream earlier, you'd see that price uh had very low range in 2015 sometimes. So sometimes price will just switch up, and in that case I'll just create something based off of the ATR. You can use ATR and create something. Honestly, you don't have to use my Excel sheet. If you want to use my Excel sheet, it's up to you. These are some data that I have, and obviously, so I'm gonna start creating this data. So we have my setups, and we have my setups, and we have the months, right? And then we have the quarters. We have good trade, bad trade, break even 1 hour. Anyways, moving on. Moving on. Alright. Continuation of London session. You get a point. Getting so now if it's first candle, we're getting wherever it closes. If it's any candle after the first candle, it depends on how far it closes below above the high. So in this case, it was not too far. You could take the trade immediately, or you could. I personally waited for a pullback. I took the pullback. Obviously, you know what happens. It went all the way down. You win some, you lose some. It's life. Moving on. Reversal long only from prior day support. Okay. So prior day support. An instance I'd have to find one, and I really don't. Wait, actually, I may be able to. There should be one here. So we have prior day support, right? We just want this setup. Only the first 5 minute candle, the very first 5 minute candle is when you can use the setup. If it doesn't occur in the first 5 minute candle, forget it. Now what you want is your is for price to touch. Anyways, forget, I'm not gonna look for this thing. It's for price to touch your zone. By the way, my zones are obviously the low of the prior day up to 70% of my stop loss for the day. So in this case, 7 points. Higher prior day, down 7 points. That's how I create my box. That's how they're equal. Uh the first candle has to go down, touch the box and reject, or go in, but it must close above the box. Then we'll take that trade. If it doesn't close above the box, we'll let it be. Depends. Maybe if it's right here, I might take the trade, right? But that's the idea. It needs to reject. Each trade I want to reverse from that box. That's the whole idea of that one. Anyways, next one, reversal from London session, extreme support resistance. That was this trade here. Again, so for this one, it needs to be, you can just use eyes, honestly. Like how close is how far away from the high is the close of that first candle. So for this one, it's only valid within the first three candles, 1 2 3. So for only first 15 minutes. And the idea is you want price to go towards the high. It doesn't even need to get this close. Sometimes it would even just come here and reject it. For me, as long as it's within 7 points, depending on the range of the London session, sometimes it's 4 points because maybe the range is like 9. As long as 7 points on the high side, and then for the low side, it needs to be 4 points for me to take. And for the low side, it's only the first two candles. Oh my god, there's more nuances. Low side is first two candles is only when it's valid, and none of the candles can be blue. You know what? First three candles, but anyways, none of the candles can be blue. So that means if it's the first blue candle, then it's invalidated. If the second candle is blue, it's invalidated. But if you took the trade before the blue candle, it doesn't matter. So in this case here, price can reject. We got in there. As long as when price closes above that line, it's invalidated, right? And then we're looking for the reversal. In this case, we ended up break even. Next trade, next one, reversal from. Oh, is that why? Oh, I have it open on two ends. I see. Fair enough. All right. So next one, reversal from London session break. That is when the daily is downtrending. When it's the daily downtrend, I already explained when the daily is downtrend. When that happens, in this case, we break. We're not gonna be looking for continuation. We're gonna be looking for reversal. So reversal means, uh, technically, I would not really take this, but it's basically, uh, price needs to look like it wants reversal. It goes up, rejects, goes up, maybe rejects, maybe it goes up, it doesn't reject, it pulls back. So you want this is only valid within the first 30 minutes, so first six candles. And the idea is you want to find it's a breakout trade. So price goes up, rejects, and then you take the 5 minute breakout, looking for price to reverse fully. Whatever it looks to you like it's gonna reverse is whatever. Double bottom close with London section extreme low. Okay, I'm not gonna explain this. It's a little more. It's very. It doesn't happen as much. It doesn't like. I need to really look for it. Prior day gap, mostly used to fill the gap to the upside. We had a very recent example of this. So if we just put this as regular trading session, make it easier. I think you already here when I took that trade. So the idea is something like this, right? So we have a gap. We expect the gap to fill. We take price opens. That's the gap there, right? Price opens. Uh, pulls. It needs to break the low. We would only explain one side. We need to break the low, and then after it breaks the low, then we look for the reversal. So it broke the low here. We'll take the breakout of that candle. That's it. That's it. That's what that's about. This was the day we really took that trade. So it came down. We had this gap. We needed to break it. That's it. That's what that's about. Yeah, I haven't taken. I don't think I took this trade. I can't remember honestly. I think I did actually. I think I did. Anyways, all right. That's the prior day gap. 3 week influx point. I told you if you understood what I said earlier, then good for you. 3 week resistance. Well, when the influx point is above, so we had something like that today. I can just show it real quick. So it's same. So when the influx point is above, right? In this case, was this one? No, in this case, yeah. When it's above, then so one. In this case, 1, 2, 3 candles. Obviously, you take the most recent. So 1 to 3 candles. You know what? I'm not gonna explain this. I don't want to explain this. But okay, let me just finish what I was saying. I already started. 1 to 3 candles. You need a second black candle. After the second black candle forms, then those 3 points, the blue candle becomes the 3 week resistance. It becomes a resistance point, and so you treat it like a resistance point. And then you can if price closes above the highest wick, then it's invalidated. London session support resistance. Well, that's just this and this. Sometimes, uh, let's say after the first 3 candles, we didn't get any close, reversals that we could have taken. Then price pulls back a little bit and then comes up and tests it, but it doesn't close above, and then we get a breakout to the downside. That one, whatever has to do with the London session, is always invalidated when the London session is closed above, or in this case below if it's on the downside. Prior day support resistance zones, well, you need price to come to the zone. It's invalidated if it let's say so right here is a support. If price breaks it by 4 points or closes at 50% of 4 points, so 50% of 40% of your stop loss. So in this case, 2 points. If price closes at 2 points, then this is invalidated and it becomes a sell zone, a resistance zone. Otherwise, your liver price hit the zone, reject, at the be close as possible to the zone, your entry point at least, and the body of the candle, and then you just take a breakout. That's it. It's just support and resistance. That's the prior day support resistance zone. Current day support resistance zone is, well, you have your current. This is just, and these support resistance zone is just market structure, and then prior day high and low. That's it, and that's it. We're done with this shit. Never again. At least I did. I did something. I tried. I tried. I tried. I tried. I tried. All right. All right. Thank you very much. I will now just keep quiet, play some music, mute my mic, maybe play some music. Actually, I really don't like music like that, especially when I'm really using all my brain power. Um, and I will just get to, now that I've explained what I'm looking for. I hope you will keep up with the things you see on screen. So when I would always put a, what I'm gonna be doing. I'm gonna be treating it as pure stop loss take profit. And if I stop out, I stop out, because this is how you find it. I'm not gonna, all options is going to not be, in this case now for today's on. It came back all the way to 1. I bought it at 1.2. How would I know where it stopped or when it broke even? So we'll just treat it as pure stop loss take profit. I will always have, these things, and you'll see when I take trades. It's up to you to figure out what setup that was. Up to you to figure out what setup that was, and enjoy as I back tests. Please, I hope you come up with something. I hope you learn something. Nothing is ever free. Nothing. Well, I guess this video is free. Nothing is going to really. Well, I don't know about nothing. Personally, I don't have the time to really just give you, spoon feed you, freaking put you on my lap, get some akamu, and start giving you some. Why did I choose akamu? Anyways, I really wish you the best. I know I'll be freaking profitable soon. I'll be making a lot of money soon. I know I said I was gonna do it in April, but, well, shit. I didn't have that document. This document I have right now, I did not have it in April. And let me tell you something. The moment I started to, the moment I created this document and created my setups and everything, like every single setup in there, as long as I see it on the day, I'm taking it. And the idea is, all the setups add up to the direction price is actually going to go to. That's the way it works for me, or the way I look at it. And that's why I also trade options, because, well, whatever. So, anyways, I hope you can take one or two of the strategy, and one or two of the setups, and just focus on those one or two that you understand, and you just do those. You don't have to do everything. I'm just the person that likes to do everything. I love my strategies. I love trading. I love the market. You so good luck understanding. There will be no music because I don't want to have to explain. Oh, so I don't want to have to re-upload the video version because I got my videos banned or something. Um. All right. All right. All right. All right. All right. Okay. Let me get back into the zone. Let me put this mic